There are two charts you need to take a look at today. Hi, everyone. I'm Mark Lichtenfeld, Chief Income Strategist with the Oxford Club. And I want to show you two important charts that could help you navigate this market, this crazy, crazy market. Now, as you know, the stock market tanked in February and March. We went down 35% in 1 month. That is the fastest drop in history. Now, most people, when the market dropped and then started to rally again in mid to late March, they were hoping for what you might call a V bottom. That's when stocks go down, straight down, and then they come back up. Unfortunately, that's not what typically happens in the stock market. I'm not saying it can't happen or it never happens, but it's not very typical. So I want to show you this first chart here. This is of the S&P 500 in 2007 to 2009, the Great Recession. And it's very typical of what happens in bear markets. You can see the market sold off in 2007 to 2008, and then it had a bit of a rebound in late 2008. And just as people are starting to get hopeful again, and it was a meaningful rebound. On this chart, it doesn't look so big, but the S&P went from about 750 to about 950. So that is a meaningful amount. So as people started to get confident again, it came back down and hit a new low below 700. It actually went down to 666. So once it went back up and bottomed, that is what we call a W pattern. You can see because it kind of looks like a W. That's what's very typical in the stock market when you have a bear market and especially a big whoosh down like we just had. So looking at this market, again, I'm not saying it's impossible that we won't just go straight back up to the highs, but I'm not expecting that. I'm expecting the markets to go back down, at least test the bottom at the S&P 500, or perhaps even go lower, maybe down to 2,000, maybe even a bit lower than that. So keep that in mind that we should hit a W bottom, I believe. That's what normally happens. Now, the second chart I want to show you, and this is of gold. Now, I'm going to tick a lot of people off here, especially the gold bugs. But gold really hasn't done very much since the beginning of the year or even since the beginning of March. Now, that's really confounding because gold is what you're supposed to hold during a crisis, right? That's going to be your savior when all hell is breaking loose. Well, all hell is breaking loose across the globe. We've got this insane pandemic, and gold hasn't done anything. Gold is also supposed to be what you hold as an inflation hedge. Yet we have a $2 trillion stimulus here in the United States. And keep in mind, the deficit for this year alone was going to be $1 trillion. Now we've just tripled it. Japan has a $500 billion stimulus, and both countries are expecting to have even more stimulus. So everyone is just printing money like crazy. That certainly sounds very inflationary to me. So if gold can't rally during a crisis and during what should be a very inflationary period, when will it rally? So when I look at this gold chart, gold is telling me one of two things. Either we are not going to have a period of inflation despite all the money printing. So perhaps we'll even go the other way and have negative interest rates like many other countries in the world, especially Europe, have. Or, and I'm going to tick a lot of people off here, maybe gold is just a pretty rock.
Oh, no, you didn't!
Right? Maybe gold is just an asset that is only worth what someone else is willing to pay you for it. And whereas a stock, now granted, somebody has to pay you for it in order to realize that value, but a stock does have, it does represent a company that has cash flows, and those cash flows can be valued. They pay dividends in many cases. There's a way of valuing a business, whereas gold, there's no way to value what a chunk of gold is worth. It's only worth what someone's going to pay you for it. Now, I'm not saying don't own gold. The Oxford Club recommends that 5% of your portfolio be invested in precious metals. I own some gold as part of a diversified portfolio. But if you're banking on gold to make you rich during this crisis, or even as a store of value during this crisis, so far it's not holding up its end of the bargain. It hasn't gone down, I'll give it that, but it's really not doing what it's supposed to do. So keep that in mind for for the gold bugs out there who are getting excited because this is supposed to be the moment where gold is shining, or is it supposed to shine? It's not shining at all right now. Those are my 2 charts for you today. Thanks for watching. Hey, we've got almost 1,500 subscribers on this channel. I hope you're one of them. If not, please subscribe. Let's get us up over 2,000, and I'll see you next week on State of the Market.